Trading is hard, bro. It's harder when you don't know what you're doing. Truthfully, if you don't know the direction price, you don't know what you're doing. I'm going to show you how to find the direction of price. So, as we bring up our charts here, this is GBP USD, right? So, I always talk like now I'm going to be talking about top down analysis. So, you always want to start top down and see what the higher time frames are doing, because if the monthly is going up and the weekly is going up, if the weekly is going up and the daily is going up, and then and it's just like a little like domino effect, bro. So like the higher time frames will tell you what the lower time frames are technically doing or what they're going to end up doing in the future. So as we're looking here, we have, let me just delete everything on my chart, right? So this is the monthly time frame. So the monthly, previously it had this big run up and it ran into this fair value gap and this up close candle, this bearish order block right here. From this point, price found some resistance in this area and it traded away from this spot. So where was it heading towards from here? Well, we don't have no internal range liquidity, no fair value gaps. We do have this down close candle right here that we could have potentially found support around. However, price did trade through that. And the next area of interest would be this low right here, right? And this low also aligns with this monthly fair value gap that price also looks like it has moved away from once, came back in, found support at as well after that turtle soup, and now price is moving away. Now, how could you have taken advantage of that? You would drop from the monthly to the daily, look for your daily market structure shift bullish with the weekly candle close to confirm it. But we're not worried about that right now, right? We're just looking for top down analysis, see what price is doing currently versus what it's done. So we're going to go to the weekly, right? We know that the monthly found support right here and it's headed up. We already are going past this. I mean, the monthly candle barely opened not too long ago and it's already bullish as hell, but we're already trending past this fair value gap right here. And we could tap into this up close candle right here. So these could be areas of interest in the future and now, if that makes sense, right? And now being this fair value gap right here. So we're just going to put that right there. Boom, boom, boom. Now we're going to drop to the weekly. Let's look at what the weekly is doing, right? So for this weekly candle, dang, it's Wednesday. This week is just booming. So this weekly candle, it looks like, as you can see here, we had this big run right here. That was the turtle soup on the monthly time frame. We had this fair value gap get closed over. We created a bullish fair value gap that we respected. This is giving you bullish ideas, right? If bearish fair value gaps are getting closed over and they're getting disrespected, and then bullish fair value gaps are getting created and respected, what tells you that price is bearish, right? I mean, just saying down close candles are getting closed over while up close candles are supporting price and shit, or down close candles, you know what I mean? Like it I said that backwards. Down close candle supporting price. Regardless though, you can see right here that we had weekly respect this fair value gap, trade higher, disrespect this down close candle, creating this down close order block right here. Boom, boom. And these are just areas of interest, y'all. Not saying that if slash when price comes into these areas, that price is going to have a reaction to them. Sometimes price can come into them, disrespect that one, then come into this one, and then have a reaction. But you can see that it found some support around this weekly fair value gap right here, right? And so this is weekly internal range liquidity to external range liquidity. Right here, we would be looking for a 4-hour market structure shift bullish off of this weekly internal range liquidity fair value gap with the daily candle close to confirm the 4-hour market structure shift bullish. I know it gets kind of crazy, but rewatch that a few times, right? I've been showing you that 4-hour market structure shift in the last 2 videos. Go check them out. you'll kind of get an idea of what I mean by that. But from here, you can see that price tapped into that area and it got sent higher, attacked these external range highs over here, which is also part of that fair value gap on the monthly time frame. So with all that in mind, this was bullish, right? If we go down to the daily time frame, we could see that usually whenever there's a fair value gap on a higher time frame and you drop to a lower time frame, it's a lower time frame turtle soup. And you can see that right here. This fair value gap on the weekly, the internal range liquidity was a daily turtle soup right here. So you could either go from the weekly to the 4 hour look for the market structure shift, or considering it a daily turtle soup, you could go from the daily to the 1 hour for that market structure shift. You know what I mean? With the 4 hour candle to close and confirm that, if that all makes sense. I hope that makes sense. But with all of that being said, you can see right here, we had that turtle soup. Boom. And in this area, we had this bearish fair value gap that got closed over. And then whenever this candle closed, we created a bullish fair value gap. Now you can have the idea, okay, price is bullish as hell. So whenever price is bullish, this is how you find your bias. Price is bullish. We are looking for buys. There is nowhere in these scenarios at all that we're looking for sells. Based off the monthly, weekly, and the daily time frame, that's your bread and butter. That's where you get all of your analysis from. And right here, you can see that everything is telling us bullish, right? So how could we have taken advantage of this week, right? How could we have taken advantage of this weekly candle for this big ass weekly expansion? How? So last week, right, we had this candle that tapped into the weekly FVG that was created the week before. This was the middle of February, right? So whenever last week tapped into it, we could drop to the 4 hour and we could be looking for a 4 hour market structure shift bullish, okay? So it taps into it around this area. Boom. Once it taps into it, you're going to start looking left of this area. Once I'm looking left, what am I looking for? I'm looking for 3 candle wick swing highs. So what is a 3 candle wick swing high? It's a high wick that has a wick that's lower to the left and lower to the right of it. So this right here is the most recent 3 candle wick swing high. Another one is up here. There's another one right here. Why? Because the wick to the right, the wick to the left is lower than the one in the middle. It's made up of 3 candles. So that's why I call it a 3 candle wick swing high. Okay. So the most recent one is right here. And then from this point, we have this candle that comes up, and this candle's high, if we look at the H up here, the price of this candle's high is 1.26140. The one to the right of it, 1.26138. So it's lower. So then the next 3 candle wick swing high would actually be this one right here. So price then closes above it. But wait, we don't want just a 4 hour candle to close above it. We want a daily candle to close above it, because that is going to confirm that market structure shift bullish. Okay. Because again, a market structure shift, after the market structure shift, it has a retracement into internal range liquidity before taking off often. That retracement is the opening of the next higher time frames candle, in this case the next daily candle, and that retracement is the open low. The open is the accumulation, the low is the manipulation, and it's the power of three, bro. It's the AMD power of three, open, high, low, however you want to freaking put it, bro. It's all the same, bro. It's the same approach, just a bunch of different names to it. This is it right here. So whenever this daily candle closes and confirms that market structure shift bullish, then I like to dollar cost average if I'm comfortable with risking 1 full percent. I'm going to risk half that full percent initially, and I'm going to put my stop loss right below that daily candle that just closed. It's going to be a systematic stop loss every single time. Will not ever change, bro. This stop loss will always remain the same, bro. Okay. And now what you can do is, knowing that it's bullish, this next daily candle that opens at midnight, you could look for it to be opening low. What does it open low into? Well, if you look to the left, we had bearish order block that flipped, right? And then we also have the down close candles there. So it retraced because remember, down close candles support price higher, while up close candles support price lower, right? So right here, you can see that it retraced. Now, if you wanted to look for a fair value gap, there's also fair value gap right here, but it didn't tap into it. If you look at a lower time frame too, you could see that there was potentially some 1 hour PDAs. So there's a 1 hour order block right here. You kind of got to get fluid with it, bro. You got to drop to every time frame. I do not recommend going lower than the 1 hour though. Like 15-minute is truthfully the lowest, and I'm even starting to go against it, bro, because then you got to worry about news fluctuations. You got to worry about the 1 minute opens, high low closes. You got to worry about 5 minute opens, power of threes, high low closes. You got to worry about all of these other ones, 10 minutes, and these other candles that we don't even care about. Like that's what's beautiful about these higher time frames is that all of these lower time frames are opening, doing their things, but their movements are so small compared to the higher time frames that it's not really effective on the higher time frames, right? And that's why the higher time frames open high low closes and all that are so crazy, such crazy moves whenever you're looking at the lower time frames. It's like, holy fuck, that was a big move. Well, yeah, it was a monthly move, and you're looking at it off of the 5 minute. It's gonna be crazy, you know what I mean? But it's not vice versa. So, anyways, right here, you can see that this 1 hour, it tapped into it in that area, right? So whenever it retraces lower and it taps into like a order block or a fair value gap or any type of like PD array, right? Once it taps in, don't worry about dropping any lower for like market structure shifts or anything like that. Treat this as your weekly open low or daily open low, sorry, daily open low into this 1 hour order block. You're going to put your stop loss. If it's a fair value gap, you're going to put your stop loss below the one candle of the fair value gap because it's a 3 candle pattern. And if it's an order block, you're just going to put your stop loss below the order blocks. And with this position, you target a 1 to 2R. Whoa, session disconnected. You're going to target a 1 to 2R, which is pretty much the highs over here. And that take profit was hit. And of course, with this position, you'd be targeting a 1 to 2R as well. It has not been hit quite yet, but it's based off of the higher time frame, the daily. So realistically, I anticipate that it's going to go past this uh fair value gap on the higher time frame, which is a monthly fair value gap here. I anticipate that it's probably going to go a lot more past it. But in this area, now that it's in this monthly fair value gap, we can start looking for a daily market structure shift bearish with the weekly candle close to confirm that. And if slash when that happens, we can look for opportunities there. Now, it can continue higher into that monthly bearish order block. We don't know what price does, bro. We just look for areas of interest, which are going to be fair value gaps and order blocks, higher time frames, right? And we want to know which higher time frame they belong to. Once price taps into those areas of interest, those PD arrays, that's whenever we drop to the appropriate time frame. If it's a monthly, we go to the daily, look for a market structure shift, and then we wait for a weekly candle to close and confirm it. If it's a weekly, we drop to a 4 hour, look for a market structure shift with a daily candle to close and confirm it. If it's a daily, we drop to a 1 hour, wait for a market structure shift with the 4 hour candle to close and confirm it. I don't recommend going any lower than that, bro. I truly don't. If you want to, 4 hour, 15-minute, 1 hour candle close to confirm it, 1 hour, 5 minute, 15-minute candle close to confirm it, 15-minute, 1 minute, 5 minute candle to close and confirm it. It is all fractal. Price is fractal, bro. Like truthfully, it's all pretty much the same, bro. Like it's beautiful, dude. But again, if you're trading off of these lower time frames, you do have to take into consideration news. You have to take into consideration every other PD array that there is, because realistically, higher time frames rule the markets, right? Institutions trade off of the higher time frames. Big hedge funds trade off of the higher time frames. So if you could position yourself in alignment with those higher time frames positions, you're going to find a lot of success, bro. This is how you can find your direction. And I hope you found some value within this video. If you did like this video, comment for more. We'll see you guys in the next one.